You're looking for a couple of good value stock picks. Well, you've come to the right place because Tracey Ryniec, our value stock strategist, is going to let us in on a couple that's on her radar, one of which is Western Digital, WDC. And I like the way you worded this, global provider of products and services that empower people to create. What does that mean?
I don't know. I mean, it's more like, they do the storage. So they make, the storage that goes into cameras, laptops, all that kind of stuff. So it's a creative endeavor.
Obviously, you were feeling in a creative mood when you wrote this article.
Yeah, I mean, Western Digital we've talked about before. They've been cheap for a long time. They were actually, I think, around 5 or 6 times the estimates the first time I talked about them like a year or two ago. And now they're a little bit more pricey at 11 times, but compared to the overall market, that's still really cheap. These guys are interesting because they're just about to report. I usually don't like to talk about stocks right before they're going to report because you never know what's going to happen.
Right.
But I put up the chart of all their earnings surprises over the last 5 years, and they put together a nice string of earnings beats, 7 quarters in a row here. And the estimates are actually rising into this number. So over the last week, 3 estimates have been revised higher. You don't see that very often because usually the analysts are kind of, the wait and see approach like I take.
Right.
And they don't like to go out on the edge ahead of the number, but 3 of them have, and that's usually a bullish sign. So you might see this same pattern continue here. The stock didn't do anything for a long time. It was just kind of meandering around, but 2013, you saw a real big jump in it. Like I said, still cheap, still trading at 11 times. So it is a good value stock, and storage is still in demand. So they're putting up some decent numbers.
All right. Then this other company, Trinity Industries, operates in multiple industries.
It does. Trinity I've talked about in the past too. These are the rail car manufacturers, but they also have barges, and they also make the dividers that are on the expressways, like when you're traveling through the construction zone.
Oh, the cement dividers?
Yeah, that and like the little things that pop up out of the ground where they can move the lanes. They make all of that, like the safety things out on the highway. So they're a little more diverse than some of the other rail car makers that only focus on the rail cars. So the analysts like them for that reason because it gives them multiple income streams if one is slowing down.
Right.
Now the rail car story has been dominated by energy because a lot of the crude is being transported around. So a lot of the energy companies have been buying up the tank cars, and that put a big demand. There's a big backlog with these guys. So the story's been good for a couple of years, but recently some of the analysts are saying, we're starting to see a slowdown. There's going to be less demand on the energy side. They've been lowering the estimates a little bit or getting a little bit cranky about 2014. In December, one of the analysts, Raymond James analyst, actually lowered his estimates, and you can see kind of in the stock here, you see a little bit of sell-off there. That's what that was for. The whole group got hit. But since then, Trinity's actually entered into a couple lease agreements, billion-dollar lease agreements for the rail cars. And the numbers haven't been that bad out of the industry so far. Trinity hasn't reported yet. They're reporting about mid-February. They beat 8 times in a row, so they do have pretty good track record, just like Western Digital here. Shares are trading at the 5-year high, but again, cheap. They're trading around 9 to 10 times. That's much cheaper than the overall market. I like the rail car sector for 2014. You might start to get a little more nervous by 2015, but there's still supposed to be about 30% earnings growth in 2014. So it's slowing down a little bit from this year, which saw almost 50% earnings growth, but 30% earnings growth, I'll take that at this valuation. So I do like it.
And of course, that's the last thing any of us want to see are cranky analysts out there because you never know what can happen if they get cranky enough. Do you own either of these two?
I actually do own Trinity, and it's also in the Value Investor.
Oh, okay, which is a service that you are the editor of.
Yes.
For those people who don't know.
Yep.
All right, well, thanks for that. If you want to check out other stock picks on our website, and you're not there right now, get over to Zacks.com. You can link to them right off the homepage. Stock picking strategies as well with Tracey Ryniec. I'm Terry Ruffalo.